Hey traders, this is Todd Gordon. This is the stock options video update for August 6th. This is going to be Wednesday's video. So to start, let's take a look at the major stock indexes. We're going to look at the Russell, the Nas, S&P, and the Dow. I'm going to use this for the free video as well, a little longer than normal, so I took it off the high def video setup and just did it on the lower def, which makes production of the videos much easier. So hope you understand that. It was another down day today. There was a little bit of news coming out of Poland that Russia was stacking troops on the Ukraine border, and the S&P's dropped, like, I don't know, it was about 8 handles in a very short period of time. So it was this move right here, and it kind of stabilized through the rest of the day, but it was a decent little bit of selling. And from the video yesterday, we were expecting kind of that move to happen. So let's take a look at exactly where we are back on these stock indexes. So we're looking at the Russell, we're looking at Dow. The S&P is here in white. It's not labeled. And the Nas is up in green. So let me just write ES. Okay. So ES. Okay, so from here you can see that the Russell right here is weak, but has not come back to test these lows. The Dow is kind of the middle, S&P is in the top half, and the NASDAQ is number 1 in terms of relative strength. Okay, so we've been really focusing on the short side here of the Russell, and we're moving into support as I've been saying. So let's go from the daily down to the hourly. I want to show you something interesting that happened today. The Russell, along with the other major markets, made a higher low today. All right. So we've been making a series of higher lows in the Russell. This is the S&P. It's made a higher low. The NASDAQ did make a higher low at the close, not as sharp as the other ones, but you'll notice that the Dow is the only one that didn't kind of recover. So we're looking at this saying, boy, a lot of the markets didn't really follow through on the downside, and I would say that the Russell is the most pronounced in terms of being up and off the low. So the Russell has shown some really good resilience here over the last couple sessions. So what I'm wondering here is, if we go to the Russell, this is a new wave count that we worked up just today, and I want to talk about a potential trade that's setting up. I had my finger in the trigger here, just waiting to see how the S&P and the Nas closed today, just to get confirmation that this is in fact the right trade. So we're up here on the daily with the Russell, and I think we're falling into a triangle wave 4. All right, so let me just make this very clear. Green up, green 3, and then you're moving into a triangle. A triangle is just simply a 5-wave move. It's going to push down here in A. It's going to make a lower high in B, make a higher low in C, make yet again another lower high, higher low. That should be the end of the triangle right about here. Okay. Now looking at our typical wave 4v3 measurement, the minimum distance is October. That this thing should be contained in this triangle. So that's pretty interesting. If you think about it from an options trading point of view, the Russell is up around a pretty high implied volatility level where we could actually look to put some trades on. So let's do a little bit of math here. So let's go up to the IWM. All right. Now I want to set up some possible trades here with you in the Russell, and I want to do the math with you. So if we're looking at basically a pattern that says we should not move below this level, which is 1081 in the Russell, pardon me, and 1213 up here on the top side, we want to look to take advantage of this by selling some option premium. And I want to do this in the IWM, so let me just overlay this guy, IWM, just get the scale over here on the left, we'll line it up, and there we go. So now we have the scale in IWM. So pretty much it's going to be 120 area, down towards about 109. Okay, so now let's look over at the options chain and see if those levels have any significance as far as the options market would price. Okay, so we're looking at September. I want to be a little conservative. I don't want to go all the way out until October because this thing could, end towards the later end of September. So I'd like to price this in September. Expiration should be right about here in those SEP options. So I have the SEP option chain set up. And what I want to focus on here is this expected move figure in the Russell. And that's at 21%. Okay, so that's at 21%, which is $6.80 for the rest of this September contract. All right, so that's a really key bit of information. This right here is what you call the one standard deviation level. Okay, that's 1 SD right here. So basically what it's saying is IWM, which is priced at 111.38, should go plus or minus $6.85 over the next 45 days. Now, what that means is if you look at this in terms of standard deviation, you guys remember the standard deviation curve. Oh, that's horrible. Sorry about that. My math teacher would roll over in his classroom if he saw that. Okay, so basically what happens is the -1 standard deviation is over here. The +1 standard deviation is here. And what that means is the market should fall in between those two standard deviation levels 68% of the time. All right, so that means we have a 68% chance of staying inside of $6.85 above the market and $6.85 below the market. All right, so now let me bring a spreadsheet over here to calculate this very quickly. Remember, we're looking for plus or minus $6.84. So let's go up to standard or the closing price 38. We'll do minus, and let's just do it this way. It's $6.84. So we'll do 1 SD plus 1 SD. No, we'll just do that. Okay. Just do this, format these two cells, and we'll just go text. Perfect. 1 SD minus 1 SD. All right, so we'll just do this plus this, 117. We'll do this minus this. Oops. Equals 111 minus that. And those are your numbers. Okay, so now let's take these numbers and go back over to the chart. All right, so we'll do this. Let me see if I can scrunch this out. And let's see where these numbers play out. All right. So we're looking on the left scale for 104.54, which is, I'm looking over here because that's the IWM. 104.54 is right about here. That's fine. Okay. And then 117.38 is right about here. Okay, so now those are your plus and minus 1 standard deviation levels for the September options. What you'll notice is the plus 1 standard deviation is right on top of where we'd expect the D wave to go and then fail. Okay, that's at a key 618 level, which is measuring distance traveled in B compared to distance traveled in D. All right, then on the downside, we don't think markets should really get below the A wave low, so we already have that kind of drawn in. So that is the minus standard deviation level at about 100 104 right there. So that's the level right there. So that's the plus and minus 1 standard deviation levels, which is significantly below where we think this A wave should go. So that looks to be a pretty good trade to say by the time this expires out here in September, there's a 68% chance that we're below this wave resistance and we're above kind of this wave support. So I really like the look of this trade. And then the best part is the credit that we'd receive from kind of selling premium is worth it because the option stats show we have a pretty good implied volatility percentile, which is found over here in the Thinkorswim platform, about 55%. So, a really nice way we could look to do this is to trade SEP, 45 days to go, and basically just look to sell the 117, kind of 104 strangle. Right, so we can just go over here, we'll sell, right click on the call side, we'll sell a strangle. We're going to sell the 117 calls. We will sell the, what did I say, 106s, 104s. Sell the 104 puts. So you sell the 117s, sell the 104s. And that one's going to have upwards of a 70% chance of success based on that high implied volatility. But again, I think the chances of it being correct are actually higher because we have clearly defined support and resistance levels based on the wave count. Okay, and plus, as I said, we are starting to see a little bit of a divergence over here as the Russell's acting strong today at the close, while the Dow was weak. S&P held the lows, NASDAQ held the lows. So I'm wondering if this selling is over in the Russell. I don't need the market to full-on rally. We just need it to kind of go sideways, and then that's perfect. Okay, so I'm looking to set up that trade for the member service. All right, so let's leave it there for now, and then see you guys later.